What's going on, everyone? Jeff back with another video here. NIO stock has been on a very impressive run over the past couple of months. Back in April 27th of 2020, NIO stock was trading at $2.90 and now has seen highs over $16 in the month of July. And now the stock has reversed. It's sold off a little bit. NIO is currently trading at $11.82. But there's very few companies that have made this kind of return in such a short period of time. You could kind of group it in with the COVID-19 stocks, the stocks that really took off. A lot of the cloud-based companies and tech companies that really took off, traded into all-time highs during the COVID-19 pandemic. I think you could put NIO and Tesla both in that category. Tesla is now one of the biggest companies in the world. They just went over roughly a $300 billion market cap. But now NIO, in contrast, is still a very small company, only with about a $14 billion market cap. Still a lot of room to grow and run. Let's lay it side by side on a 3-month comparison to Tesla stock. Now, I'm not going to try to make this video all about Tesla. I'm just saying in 3 months' time, NIO has actually had a stronger rate of return. Tesla has given up about a 95% return in 3 months. NIO is well over a 300% return. Now, when we back up to 6 months or even 1 year, Tesla has actually been the stronger stock. It's in 1 year's time, Tesla has returned about 434%, and NIO has around 222%. The real thing I want to focus on here is, where did you buy these stocks at? Okay, if you bought into some of those lows, got to remember, over the past 52 weeks, NIO has been as low as $1.19 and as high as $16, so well over 1,000% return if you would have timed it correctly. And for those of you all who are students in Trade Alerts Pro, you're going to know where we've alerted those stocks at in our course. And we have a very good cost average on both NIO and Tesla. So what I want to talk about in this video, guys, is NIO going to trade up to $20 per share this year? As you can tell from this comparative chart, it has a very similar chart pattern to Tesla. Tesla in the red, NIO being in the blue. Even though Tesla has slightly outperformed NIO over the past year, you can see they trend very similar. When one dips, the other dip. And when Tesla jumps, NIO tends to jump. They take sympathetic gains, they take sympathetic losses, and they kind of trade as a group together. So we're going to talk about, is NIO headed to $20 this year in this video. Before we get started, guys, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. So let's just start here and look at earnings, okay? Some of the reasons you can make an argument that NIO is still overvalued here in this range is their inconsistency on earnings, okay? Q2 2019, they've had a big miss. They missed by 21 cents. Then guidance got lowered massively, and they had a small beat in Q3. Q4 2019, another big miss by 13 cents. And then in Q1 2020, they maintained their guidance and got a decent beat. They beat by 3 cents, and they also beat on revenue. So this reminds me of a very young Tesla company, so inconsistent on earnings. It's hard to really say, you know what, this company is at fair market value. I think the argument exists that it's too erratic on earnings to really nail down and say, hey, this is a good stock to own. But that's part of being an investor. Sometimes you have to inherit that risk. You have to buy those stocks while this company is very inconsistent to get the massive level of return. Keep that in mind. Not all companies dig themselves back from a penny stock level. Most stocks that trade down to $1 never come back, you know. So NIO has already done the impossible to make such a strong recovery to $16. And also too, guys, Tesla and NIO are both very news-driven stocks, okay? News can push them up massively, and negative news coming in can push them down. So one of the biggest catalysts that has pushed NIO stock up to new highs come back on July 10th when the electric car manufacturer landed a $1.5 billion credit line in China. So that's very important for them to sustain their business. And so where did this come from? Well, obviously a strong sales report from NIO helped to clear the way for the credit facility. Very strong sales report. Their participating banks are China Construction Bank, ICBC, Bank of China, Agricultural Bank of China, Industrial Bank, and China Merchants Bank, according to Bloomberg. So they are backed by a lot of the big banks in China now, where at one time their credit was kind of deemed worthless. and nobody was really wanting to lend NIO more money. So they certainly survived a very difficult period of time. Now they need to make the company grow, and they need to get a lot more consistent on earnings, but strong sales can pretty much overcome anything. Again, this is another thing you got to keep an eye on quarter to quarter and month to month and basically day to day. Back on July 2nd, NIO reported deliveries grew 190% year over year in quarter two to 10,331 vehicles. It was also reported they delivered 3,740 vehicles in June, consisting of 2,476 ES6s and 1,264 ES8 model vehicles. So those numbers are very popping. 190% year over year, and deliveries up 179%, okay? So that is very, very solid results. And I am anticipating a strong earnings report. Again, you have to get it with earnings. I can't emphasize that enough. Now, NIO has not formally set its next earnings report date, but it is speculatively set for September 22nd, 2020. So have a little bit of time before the next report is going to come in. But as always, we will be covering that, watching it very closely. Some things that can push these stocks hard either way, to the upside or downside, is analyst ratings, okay? And so through February, if you want to go back to February 2020 this year, Bernstein upgraded NIO from underperform to market perform. JP Morgan Chase upgraded them in May from underweight to neutral. Goldman Sachs in early June gave them a buy rating and then reversed it back to a neutral rating just 3 weeks later. And CICC neutral to outperform in July 21st. Now, I want to talk about that for just a moment. They feel like NIO is the next pure electric vehicle stock to own. It's very similar to Tesla. I don't think it is the exact same story as Tesla, because Tesla is really the pioneer. They're really the first company to do it, and probably by far the best company to do it. And now that they have a lot more money on the books and they're valued a lot higher, it's going to be even harder for NIO to compete with them. However, if you're the type of investor who is going to dump all their money into a NIO stock, I would encourage you to make sure you're a little bit better diversified. American auto manufacturers, that is no place for your money to be. Like General Motors and Ford and several of those companies, it's just not the place to invest anymore. If I'm going to put investing dollars into cars, it's going to be through Uber, Tesla, and NIO stock. And there's also some other companies I'm interested in too. So don't take these upgrades / downgrades, even like this one here. When Goldman Sachs downgraded them to neutral, that's not necessarily a bearish call. They just took their buy rating off. A lot of that probably has to do to the massive run up in stock price that NIO had. When you go up 1,000% in 3 or 4 months time, it is probably time for the stock to cool off a little bit. Same with Tesla. Tesla was trading at $200 a share not long ago, and now it's over $1,500 a share. Anytime you see a big move up in stock price like that, normally the shorts are going to come in, put options are going to start getting a lot cheaper, a lot more affordable, calls are going to be more expensive, and you will see the stock sell off over a period of time. But most all of the coverage is starting to turn bullish on NIO stock, and I do think it is a buy here. Just leave yourself room to cost protect. So let's wrap up this video, guys. Let's talk about, is NIO stock going to trade its way up to $20 a share this year? I think it's very possible. Let me go over a couple of things, comments I see, and when people leave comments here on YouTube, other places, other platforms I have. And here, I'm just going to throw something random out here. Hey, I bought NIO stock when it was $15 a share. What should I do here? I'm going to tell you the answer. I've said it in pretty much all of my videos. For long-term investments, don't put all your money in one position, and always leave yourself money to cost protect, okay? Open up your portfolio and look at it, guys. If you own one stock and all of your money is in that stock, you are doing the stock market all wrong. Never go all in on any one position. High risk, low risk, or in between. If you got in at $14 a share, you don't necessarily have to sell, but wait for a pretty strong pullback, a 10, 20, 25% decline in the stock, and buy more to lower your cost average, okay? And be diversified. Please, I beg you, do not put all your money into some of these high-risk stocks. Yes, I do think NIO will find its way back to $20 a share, and probably, most likely, by the end of this year, if not mid-2021. I would like to always give things about a year's time, and I don't want to count my eggs before they're hatched either. The next earning report, and as these sales reports come out, month after month. That has a lot of influence and a lot to do with how NIO stock is going to perform. And to be quite honest, the performance of Tesla stock has a lot to do with NIO's performance as well. So a lot of little factors that can play a role, but with the smaller market cap, this still being somewhat of a new company, and it has not IPO'd very long ago, I think it does have a lot of room to grow in an economy that is turning to electric vehicles, okay? Now from here at the $12 mark, I could still see NIO selling off some more because these stocks are going to cool off a little bit. You take a big run like it just had, you're probably going to see it cool off a little bit. Is that a reason to sell? In my opinion, no, it's not. If you get some price points you want to lower your cost basis, by all means go for it. NIO stock is most likely going to sell off some more. It might get back down to $9 or $10 again, might get back to $8. We have about a month and a half before we're going to see another earnings report, and who knows what happens in the meantime. But from here, I really like NIO as a long-term, highly speculative investment. I think you should make room for it in your portfolio, and I think $15 to $20 a share is not long around the corner. Maybe, like I said, give yourself 6 months or a year, you should see another decent level of return. But in the short term, just keep an open mind. It's probably going to sell off a little bit more. So drop your comments down in the comment section, guys. I always enjoy hearing that. Tell me what you think about NIO stock. Where does it go from here? Where will it be trading at in a year from now? Thank you as always for watching the video, and have a great day.